Elon Musk recently announced that he is stepping down from DOGE, the Department of Government Efficiency. And many people were excited about Elon Musk going into the US government, taking his tech, Twitter, Tesla brain, and slashing government spending. Unfortunately, after 6 months, the results are in, and DOGE has been an utter failure. And today, I'm going to talk about not only why DOGE was a failure, but why it was doomed from the very start. However, I'm also going to argue that this is good news for you and I as investors who are paying attention and want to grow our wealth and are not particularly interested in the politics of it all. So without further ado, let's dive in. What's up everyone? This is Brandon from Wealth Potion, and before I begin, I like to say this in most of my videos that have to do with Donald Trump, Elon Musk, or politics in general, and that is, this is not a political video. Of course, I have political views, I'm sure you have political views, but my goal with Wealth Potion is to help you grow your wealth, to simplify financial education and teach you things that we should have learned in school that I had to learn the hard way. So regardless of your politics, whether you agree with Elon Musk or if you hate the guy, I think it is really important for us to understand the dynamics at play, why DOGE failed, why I think it always will have failed, and how we can make money and grow our wealth with this information. And so today we're going to walk through in a stepwise function. We're going to start with the basics. What is DOGE and what is the problem that Elon Musk, Donald Trump, and team were trying to solve? Then we'll talk about why the solution of DOGE failed, and in particular, the specific situation that the US government finds itself in, that many financial analysts call fiscal dominance. And then we're going to talk about why this set of conditions has really changed the game for the US government, and in particular the Federal Reserve. Because usually in times like this, the Federal Reserve can use the tools in its tool belt to put the brakes on the economy. And I'm going to conclude by showing you that there are no more brakes for the Federal Reserve. And in the wise words of Walter White from Breaking Bad,
nothing stops this train.
Nothing stops this train. All right, first and foremost, what is the problem? Like, why does DOGE exist? Why is Elon Musk getting involved in the government? The short answer is that Elon Musk and a large faction of conservatives in the United States that got Donald Trump elected believe that the US fiscal situation is getting out of control. More specifically, that the federal debt is too high and it is growing too fast. We're going to be looking at a little bit of data here to really paint the picture. First, we have to look at the federal debt, which is now over $36 trillion. That number is so huge that it doesn't really make much sense to us. So let's look at it in a couple of different ways. First, like with any debt, like your credit card or a mortgage, you have interest payments. And if we look at the interest payments that the US is making on this debt every single year, it is more than $1 trillion. And as you can see from these graphs, these are higher than they've ever been before. And the last piece of data we're going to look at, because it's a very important angle, is comparing the federal debt to US GDP. Basically, how much debt is the country in compared to the economy itself. And it is at a staggering 120% of GDP, which is virtually the highest it's ever been. And so what Elon Musk and many fiscal conservatives are worried about is that this is an unsustainable path financially for the United States. And it's not super clear what will happen if we keep going down this road, because the US is the world's reserve currency. It's not exactly the same as our household. If you or I are running debts larger than the money that we're making, of course that's going to cause an issue eventually because we have to pay off those debts. But the US government is unique because it is the dominant currency used for global trade, and perhaps most importantly, the US government has a money printer. They can print more money into existence. This is a very important topic. We've talked about it many times on this channel. You can check out this video here. I just point that out to show that while it is helpful for us to understand the financial situation of the US by thinking of it as a household, it's a bit of a special situation. Nevertheless, people are worried. And so Elon Musk, with the help of Donald Trump, started this department or unofficial initiative as part of the US government called the Department of Government Efficiency, where Elon Musk was going to go in and slash spending. If anyone remembers when Elon Musk acquired Twitter, he let go of something like 80% or 90% of the workforce and made Twitter, which is now X, a much more efficient business. And I think there was a lot of hope from Elon Musk and his supporters that he would be able to do something similar with the United States government. But he faced some challenges. And of course, there's a lot to get into in terms of how the US government is not like a company. I'm not going to get into all of those details here because I think the major takeaway is when we zoom out and we look at the big picture. When the government spends money, it increases GDP because one person's spending is another person's income. You know, if the US government is paying some nonprofit organization in Delaware, that is money that goes to this organization, it pays its employees, and then those employees go and spend more money in the US economy through Delaware, and that increases the GDP. If you took Economics 101, you know that government spending is one of the pieces of GDP. This is where we have to introduce the Federal Reserve. One of the most important players in the US economy and the global economy is the Federal Reserve, the central bank of the United States. Again, a topic that we've talked about in the past. But what's important in this specific situation is that one of the Federal Reserve's most powerful tools is interest rates. By lowering interest rates, it can juice the economy. And by increasing interest rates, it can slow down the economy. Again, you can really think of a train. If the US economy is a train, the Federal Reserve has a bit of a gas pedal and a brake pedal. It's not that simple, but for the sake of simplicity, let's go with that analogy. The problem is with a federal deficit that is at 120% of GDP, and with interest rates as high as they are, leading to interest payments that are over $1 trillion, it is creating a very unique situation that is called fiscal dominance. This is a bit of a complicated financial concept, but to put it simply, using the train analogy, the Federal Reserve, where it usually has an accelerator and a brake, no longer has a brake. Because what is the brake? When the Federal Reserve raises interest rates, what that usually does in a normal situation is it slows down the economy. And it does this by making borrowing more expensive, right? If you want to get a mortgage out to buy a new home or to invest in a business, the interest rates have gone up, so it becomes more expensive. That happens all across the economy, and it slows down the economy in terms of consumption and spending. But that only works when the problem is private debt, when it's businesses and owners and the private sector doing too much lending. What we have today is where it's the public sector. The US government has been doing too much lending. It's the federal debt, the public debt, that is too high. So what would happen if the Federal Reserve increased interest rates? Well, it would simply make the fiscal problem even worse. It would increase the interest payments for the United States debt, and that could snowball and make the debt increasingly hard to decrease in the future. And that is what's referred to as fiscal dominance. In other words, the fiscal concerns of the US government, meaning its debt and its expenditures, have dominated the monetary policy, which is what the Federal Reserve usually is concerned with. Or to put it really simply, the train no longer has brakes. And I am borrowing this concept from a wonderful macro analyst by the name of Lynn Alden. Lynn has done many presentations on this and has been talking about this concept for, I think, over a year. You can check out Lynn's blog here or watch some of the presentations on YouTube. But basically, Lynn outlines that the US government is in a very precarious situation. And if you believe that Lynn is correct in this analysis, then that can really only lead to one conclusion, which is more money printing. Because if the federal debt is growing, and if there is no real way to stop it, if DOGE cannot succeed by cutting spending, if Trump and his big, beautiful bill does not make a meaningful impact on government expenditures, then we have to accept that the most likely outcome is that the federal debt continues to grow. And that leaves the US government with very limited options for addressing that debt. Of course, yeah, the US government could default, but that has never happened before in history, and that would probably cause a recession all around the world. Maybe there is some amazing AI boom and productivity skyrockets and GDP soars, tax revenue soars, and then they're able to pay off the debt. Again, that's not very likely. And as we've seen with Elon Musk and with DOGE and this big, beautiful bill, austerity is seeming less likely, which leaves us with one final option, which is turning back on the money printer. Because if the Federal Reserve prints more money, whether that's through quantitative easing or by lowering interest rates, that's going to juice the economy, that's going to debase the value of the US dollar, and so the $36 trillion debt will be easier to pay off because the dollars that make up that debt are less valuable. This is often referred to as inflating away the debt. And so I don't claim to have a crystal ball here, but I think if we look at history, we look at the current financial situation of the United States government, the most likely outcome, by a large margin, in my opinion, is that the US government will be forced to print more money. What does that mean for you and I as investors? Well, it means that asset prices are going to go up. And to be honest, it doesn't really matter what assets you hold. You could hold stocks in the stock market or index ETFs. You could hold gold. You could hold real estate. Maybe you're further out in the risk curve and you're like me and you hold Bitcoin. The point is, when the Federal Reserve prints more money and increases global liquidity, asset prices tend to go up. Perhaps the only asset price that might not go up are bonds. In summary, it doesn't look like DOGE is working. I don't think DOGE had much of a chance to begin with, but that's okay because the system is going to keep printing money just like it always has done, and that is going to increase asset prices. And so you and I, as investors, should continue to invest our money in assets and not hold dollars so that we can grow our wealth over the long term. I know that was a lot and it was perhaps a complex topic to cover. If there are questions about any of the pieces in this puzzle, let me know and I'm happy to do a deep dive on central banking, on interest rates, on inflation, on any of these topics, because at the end of the day, when we think about macroeconomics and macro investing, by definition, it is zooming out and looking at the big picture. And the big picture is made up of a lot of smaller pictures. And so hopefully through Wealth Potion, through these videos, and through my free newsletter, if many of you are subscribed, I'm helping you understand the macro picture by detailing some of these smaller pieces so that we can all walk away from these situations and grow our wealth faster. As always, I appreciate your comments. Please continue leaving them below. If this video was helpful or if you've been having discussions with your friends about these topics, feel free to send it along their way. And as always, I'd greatly appreciate if you like and subscribe to the channel if you enjoyed this content. Otherwise, I'll see you next time.